Let's begin, though, with big tech earnings. Amazon with that quarterly beat shortly after yesterday's close, and that did spark an initial double-digit rally. Those gains, though, were erased on the company's warning of a slowdown in cloud growth. This is what the CFO had to say about AWS on the call.
Given the ongoing economic uncertainty, customers of all sizes and all industries continue to look for cost savings across their businesses, similar to what you've seen us doing at Amazon. As expected, customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions in the first quarter. And we are seeing these optimizations continue into the second quarter, with April revenue growth rates about 500 basis points lower than what we saw in Q1.
And that was the line, Jim. That's what did it.
Yeah, and we got to flesh it out here because, first of all, there's so many good things that happened this quarter. We're seeing the beginning of the rationalization of the workforce being completely ignored over that one line of 500 basis points, taking the growth from 16% down to 11. It was as high as, you can say, as 32 18 months ago. Now, they are trying to say, listen, it's bottoming. And it's bottoming in part because of all the really exciting things that are going to happen with Chat, GPT, with generative AI. I have to tell you, I'm with them. I think that there are a lot of people who say that they lost a lot of share. I'm not buying that. There are a lot of people who say this is the beginning of the end of the cloud. Given the fact that 90% of companies are still on premises, I think there's a lot of business. And David, Olsavsky is a straight guy. Mm-hmm. He's a straight guy. Yep. And they're very confident. They are not, and no panic button there.
Yep.
They really think business is fine.
I heard a relatively positive take on it as well.
You did?
Yeah, on AWS. First of all, they came out of the quarter roughly 11% growth rate.
Right. The April was 11. The March was better.
But also it had to do with comps and the idea that Azure has a much more Fortune 500 customer base.
Correct.
And CFOs there actually were earlier to start cutting. And if you remember, there was a point at which Azure was decelerating in growth.
Right.
And now it's reaccelerating.
2 quarters ago.
In part because they were already seeing the cuts from CFOs. However, Amazon, the biggest, has a lot more customers who are smaller in some way or VC related. And they've been later to cut costs. They won't comp those until the August quarter, let's call it August. And so you're just a little later with Amazon in terms of the reacceleration.
We're going to be talking about a bunch of smaller public, admittedly. They're literally the equivalent of .coms, frankly, when I look at it. I'm talking about Pinterest and Snap. And David's just 100% right. This is guys are just cutting back now. But by the way, can we give them something here? They recognize that they spent way too much. They are rationalizing every one of their businesses, whether it be grocery, whether it be, just simple one day, same day. And I think that we forget that they have a lot of firepower if they just cut fat.
Right.
And they're doing it. They got no credit for it because all anyone talked about is 500 basis.
You're referring to operating margins in North America. 1-2 is a reversal, and you're saying that's the cost-cutting.
That's what you should be focused on, for heaven's sake. I mean, this company has the possibility of making a huge amount of money away from it. Amazon ads are very good. They're really starting to make some money on Prime. They're starting to make money when you go to your TV set and you don't hit up Paramount Plus, you hit up the program, and it goes right to Amazon. I felt that they were on their game on everything but this, and they are saying, line in the sand, they're going to do 10%. That Amazon Web Services is not going to go much lower.
Meanwhile, of course, as you know, the stock. Thank you. The stock was up a lot, right. And then they had the call, and then investors started to focus on the growth rate at AWS, and it reversed.
Right. And J.P. Morgan has a similar call to you, and I'm with J.P. Morgan.
You are.
Yes, I really am.
Yeah.
I think. Look, I've been very critical of these guys, waiting for them to finally start being more rational about spend. Jassy, religion.
The retail business still doesn't make any money.
Well, but they are at least not going to they're not throwing it in the chimney anymore. They're starting to really evaluate projects that don't make money. I wish that Alphabet would do this. And by the way, AI, I do believe, look, yes, Microsoft has leaped ahead, but when Alexa listens to your every move and starts programming your stuff because you're talking to your wife, I think it's AI.
Amazon designing its own chips. I mean, that's another thing. Like everybody else now, Tesla has its own chips. Apple's got its own chips. Meta's got its own chips. Everybody, ARM does it for everybody.
Right.
But
NVIDIA's got 45,000 chip. I mean, that's how much it costs. We haven't even mentioned how great Pat Gelsinger, nicest he's been.